Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, October 9th, 2017. I wanted to do a video just highlighting a few of the things that stand out to me today. It's been sort of a quiet day in the markets. I made a few updates and posts in the trading room, and nothing yet on the front page, so I figured I'd do this video for and share my thoughts on what I'm seeing in the market. On Actually, it was Thursday right here. I posted this chart in the trading room, the same pattern here with IWM, stating that a break of this uptrend line would trigger a sell signal likely to bring us down to any of these three or all of these three targets. I drew a scenario that looked something like this: a breakdown, hit and bounce off this first level. I thought that we'd get there a little sooner. Now we've consolidated for a while. If you look at this, we're in this sideways consolidation pattern right here for the last I don't know, week or so, and we came down close to that level. We bounced, and what I'm also noticing, we have now three failures here at about the 150.60 level. So this pretty much, this if you boxed in that area, that tells us that we've consolidated. If we have an upside break over 150.60, that's going to be bullish and probably send us higher. However, my preferred scenario, again, as drawn out last week, was this pullback, reaction off the 140.39 level, a continued move down to 148.50, call it. Remember, these are actual support levels, are not adjusted for trades. You want to set your buy to cover orders if you're trading TF or IWM or anything related to the small caps. Best to set your orders a little bit above there, and followed by a bounce and then a move down to 147.91. So far that's playing out, and you can see now we've started to crack down below that 149.40-ish support level. And if we get a solid 60-minute close, especially if we can dump impulsively into the close today, that will increase the odds we're going to see some more follow through tomorrow. Maybe we get a stick save, so we'll just have to watch this. But as of now, this is playing out that way with the move down there, and we've already broken that support level. So again, something to watch. Now, let's look at the 60-minute charts of both IWM as well as QQQ and SPY. Keep in mind that if that IWM 10-minute plays out the way I expect, to move down to either that second or especially that third target, that's going to have some longer term bearish implications. When I say longer term, all relatively speaking, what I've done here is jumped out to a 60-minute time frame. So we're now looking at an hourly chart. So every candle 60 minutes. And if we have any more downside, if my 10-minute scenario plays out, then what we're going to see here is these trend indicators are about to flip to bearish. This is again an IWM 60-minute chart that spans back several months. You can see here going back to, I guess, June, late June. And the trend indicators that I'm referring to are the ones I use, in this time frame. I like using the signal line or the 9 EMA of the PPO. Once that crosses below zero, the trend is bearish, as we had right here. And once it crosses above, the trend is bullish. So you can see the crossovers right here, and it works very well. It also the zero line, which is that dotted line in the middle, tends to act as support or resistance when backtested. So right here, you can see we had a sell signal, and that sell signal remained a sell signal all the way down to this point. You can see a few attempts to cross over, but again, I use that 9 EMA because it's a last of the two to cross. It filters out the whipsaw signal. If you just use a PPO line, you're going to get more crosses. Told us at this point go long, and it said stay long until, well, we haven't crossed yet. So, point being that if we have additional downside, if that 10-minute chart plays out the way I expect it to, we're also going to get the first sell signal here since all the way back in, August, mid to late August. Right there was our first buy signal. And I should say, correction, the last sell signal given again was back in late July. And you can see the 1333 EMA histogram. Although it's a different indicator altogether, this just plots the 13 and 33 EMA pairs. It's done a very good job. Also, you can see the back test of the zero line when you come down and touch. That often acts as support when tested from above or resistance when tested from below. So you had a very clean buy signal right here that coincided with the PPO buy signal. You had a sell signal back here. And so very few whipsaw signals. Even this one played out. It was brief, but it caught that little pullback there. that correction after that divergent high. And as always, trend indicators, in my opinion, are best used when combined with other technicals, such as you have divergent high here. We look at this chart, you have a divergent high, you have a bearish rising wedge on the 60-minute, a breakdown, and then you have a sideways trading range with a pretty significant support level, which is now starting to crack. So if we start to move down here in IWM and we get that signal to cross over to bearish, that will be the first swing signal. I'm talking more than just that 10-minute chart, which is good for a quick pullback trade. If you're trading IWM, again, if off this 10-minute chart, targeting any of these targets, from where it broke down right here, even my lowest target's only a drop of about 1.6%. Now you can make a lot of money trading TF, which are the E-mini futures for the Russell 2000, or any of the leveraged instruments, or even IWM if you leverage it for that fact. Everybody loves to trade TCA and TNA because of the 3-time leverage. Well, when you buy one of those or short one of those in your account, it burns up 3 times the buying power that does shorting IWM in a margin account. So to me, it's 6 to 1, half dozen to the other, whether you short 30,000 of IWM or 10,000 or buy 10,000 of TZA. It's going to TNA. I'm sorry, it's going to do the same thing to your buying power in your account. Okay, continuing on, let's just stick with the 60-minute time frames. This is SPY, the S&P 500. We have what I'm looking at here. I'll color code these so it stands out. This appears to be an ascending price channel. You can see the yellow lines. The SPY is working its way up within a price channel, so the trend is certainly up. Although we have this minor uptrend line, it's very well defined. You can see a lot of reactions there. We broke down recently, back tested. We're starting to roll over. So there's SPY. And it looks a lot like IWM. You have a little period of consolidation recently after the breakdown of that trend line, and we're starting to crack below it. So the near-term outlook, especially considering we have divergence just barely, but this line managed to hold this peak back all the way back in early September. That reaction high on the PPO as well as a 1333 histogram still gives us that negative divergence. We made a slightly higher high here on the RSI, so we don't have divergence there at this point. However, we have a very extreme overbought reading, and so there's the last time we had a divergent high back here. You can see what happened on the SPY. So let's see. I think at minimum we can look for especially if we close. We might get a stick save. It's hard to say. I'm doing this video. There's still over half hour into the close today for the close. But if we get a solid 60-minute close below, I'm talking a 60-minute candlestick close below this level here on all of these indices that I'm covering, QQQ, SPY, and IWM, then I think the chances are good that we'll see some more follow through this week, especially going into tomorrow. And on the SPY, at minimum, I'm looking for a pullback down to this bottom of the channel. We haven't touched the bottom of that channel in a while. Maybe a little reaction there, and we'll just have to go from there and see what the charts look like, see what the trend indicators are doing at that time. Did we come back down? And do these trend indicators find support at the 0 line and the uptrend continue or not? So that's what I'm looking for. So very near term, it's looking bearish, but we need just a little bit more work to be done. By the time you watch this video, we may or may not have that. So here's QQQ on the same 60-minute time frame. Again, a very clean trend line. I like that right now. Even though we saw a disconnect for a while there in the performance of IWM and QQQ and SPY, the divergence between the large and small caps, we've seen them kind of come together, at least on the charts recently, and they all have these near-term uptrend lines. And I just showed you SPY starting to crack, but we don't have that 60-minute close. I'd like to see trading a 60-minute time frame, intra-period spikes, meaning within that 60-minute candle, mean nothing. If we don't get we have to print a close below there for sell signal. Right now, we're flirting with that line, so let's see what happens. And again, with the trend being so strong lately, you need to give any pullback trades the benefit of the doubt. You want to see all these lines break: QQQ, IWM, SPY. If you want to add in MDY, which is a mid-cap ETF, DIA, the Dow Industrials, you can also add those in. And the more sell signals you have, the better. And again, right now we're looking. There's pretty solid support right here, about 146.44, and that's only about a 0.75% pullback. Now you can make a lot of money trading, NQE minis or enough QQQ to make it worth your while. Otherwise, if you're long and you want to position on a pullback, that's certainly a support level where I would expect a reaction. It's really a support zone from about 146.44 down to 146.09. There's a gap there that hasn't been backfilled. So chances are, if we come down to 146.44, we're probably going to go down to about the 146 level and backfill that gap, coming a little below those highs. That would also run some stops for those that are trying to step in and buy right there. So, anyways, that's QQQ, but don't forget, bigger picture shows. I don't have all these divergences drawn out, but they do work. Um, and we had some powerful divergences back here back in July, and those divergences played out for a pretty decent correction, as much in really time as it was in price. We went down in price, but we also traded sideways for a couple months there. Right now, we have divergences that are even larger in scope on QQQ, so the potential is certainly there for more than just that mild pullback. But again, we'll just have to take the charts as they come, see how they develop. Finally, just touch on something. I've covered this many times in the past over the years, not very frequently because we don't have a lot of these signals. I call these low volume sell signals. And my strategy is pretty simple. I overlay a 5 period moving average over volume, and I use that on a daily. This is a daily time frame. We're looking at IWM here. This chart spans 2 years. And what I look for levels of extreme lows. So I have these two horizontal lines, and we'll call it a zone. There's the upper band. Sometimes that triggers the sell signal, and sometimes we move down to the lower band. But it's very rare to get drops down to this level. They're not very common. We have one now. We're touching the top of that band. So let me just show you what's happened in the past. So go back, and we're going all the way back into 2015 right now. You can see we had a tag of that level there right here, and you can see what happened with price. In fact, this was what I like to call a double tap. Anytime you have two indicators kind of trigger a buy or sell signal in close proximity, I call that a double tap reading. The first one certainly started the correction. You can see there. Started the pullback. We had a little kickback rally, got another sell signal, and boom, that was the biggest correction in many years in IWM right there. That was a big drop, and that low volume sell signal helped to catch it. I believe that one was pointed out on the site at the time. If not, I've used this signal on and off for many years now. But again, the posts are pretty infrequent. Now, what you want to do is use this if you're using it as a sell signal, which it is, not a buy signal, it's no good after a sharp correction. Sharp corrections reset overbought conditions. They clear out bullishness. They bring in a lot of bearishness. So I find that signal, you want to dismiss it if it comes shortly after a large correction. This one came a little while. I should actually say this is 1, 2, 3, 4. This was several months later, and we can just look and see what it did. It certainly caught and that was a decent pullback right there. So it did trigger a sell signal. Let's see. We'll go back to fast forward. We had a correction there. But that one came really without giving us a signal. And again, the low volume reading came right after that sharp correction right here. So you need to really dismiss that one because that was actually a pretty big correction there. Fast forward, we did have a rally. We started a rally from this point right here. We rallied on up from here to here, right there. And then you can see we had a nice uh, persistent reading. We hit the top end of the range and then the lower end of the range. You can see right there to there. And that really from when we first hit it, let me just give you a straight line. I'll show you this. When we first hit it was right here. And that really, was followed by that big drop right there. Again, right after correction, you want to ignore this one right here because it came on the heels of this very sharp correction that I just covered. So here's a reading right there. And you can see if we take that up, just draw a line up there. There's your correction. And next reading was right here. Take that up. And you had a correction again and again. This one, you had a low volume reading. We came down all the way down to this level. So we hit a very extreme low, and that was followed by a very powerful drop. So where are we at now? Well, again, these readings came right on the wake of that correction, so you want to ignore those. But at this point, right here, we did have the volume move quite a bit higher. You can see up to this level here that we've fallen back to that level again. So anyways, that's something else that says watch out, because when we hit these low volume extremes, especially after a rally, that's where I'm using this. That's when historically you've seen these corrections here. And you can do the same thing with QQQ and SPY, but it works pretty well with IWM. So here's QQQ, just to hit on that real quick. I'll just circle these. We had a couple readings there, and you can see that, was followed by this sharp correction here, same correction that it caught on QQQ or IWM a minute ago. Then we had a rally. We hit the signal again right here, caught that peak, got short, or gave you a heads up just before that big drop. We had a big advance there, had a very extreme low reading right there, followed by a drop. Came down again, hit that level right there, another drop, you can see. So it's done again. There was a big correction. We also had a sideways consolidation period. We ramped up throughout this, rally, and we were in that zone. Really, never really got up above it. That's what you want to see. You want to see these lines get above and then fall down to the level. So we're not there yet, but we're almost to the first low volume sell signal in QQQ in quite some time, and volume's been plummeting recently. In fact, I saw something from the journal today. It was the lowest volume on ETFs in, I think, like 3 years or something. So anyway, something to watch out for when you see stocks just continuing to drift higher on virtually no volume. Just shows there's not a lot of buying conviction in there. So anyways, that's it. We'll wrap it up here. But again, these aren't timing indicators. They're just, hey, heads up, something might be wrong. Those 60-minute charts and 10-minute charts I just focused on, those are the levels to watch to try to give us a gauge what the near-term outlook for the market is this week, and then possibly beyond if we get those, if those 60-minute trend indicators happen to roll over. But I won't get too excited about IWM rolling over on those 60-minute trend indicators until and unless the large cap stocks follow, because we may see some, disconnect. IWM got ahead of itself, but if the large caps continue to move higher, and then in the coming weeks to months, it's possible but unlikely you're going to see anything more than a mild correction or maybe a sideways trading range in IWM. All right, this has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.